All right, good evening, everybody, and welcome to tonight's presentation. Good afternoon, actually. I always think it's evening at 5 o'clock, but good afternoon. That's because in the winter at 5 o'clock it's dark out, so I consider it evening. But this is summertime, so good afternoon. Tonight's presentation, Rookie Sayings. I always come up with these weird titles. They're my titles, just mine. An educational event for GTS members, Wednesday, June 24th. The date's correct. In case you're confused, this was scheduled for last week. I was under the weather. Just had a little 24-hour, really bad though, Tuesday. And really by Wednesday this time I wasn't feeling that bad. It's just that I already canceled it and I wasn't really prepared because Tuesday I was wiped out. So let's continue. I sent you a little, in the last email, there was sent to you a little link to click on just so you could read that. Here it is, and I just want to read it to you just for the proper prep going into this. It says it on the slide, so let me just read it. I want to help and not to offend. In an attempt to do that, I often need to identify what I consider to be wrong. I am the first to say that there are different and proper ways to make money. There are also improper ways to make money, and you will be broke soon if you continue to do these and have no means to understand if it is wrong or identifying it as being wrong. This whole topic is made especially cloudy when you consider the fact that some good trades stop out and some bad trades make money. There are different right ways, but there is also wrong. I'm going to call some things wrong today as I am talking to 99.99% of you. Perhaps someone over the course of time will defy this and be successful, but why make this hard? It shouldn't be hard, right? And it is not. Trading is not really hard. Sometimes we don't understand it. Sometimes we make it hard. Everyone, even me, sometimes, all of a sudden I got to step back and say, wait a minute, what are you doing? This isn't what you do. You're making this too hard. This is intended for someone newer and or struggling. If you are new, you have no rights. It's all about the test of time. If you've been around and you are happy, congratulations. If you have been around and not making money, then you are new. Right? I think we can all agree with that. It doesn't matter if you've been around 10 years, if you can't make money, you might as well throw you in the pot with the new people, right? Because you may say, I learned a lot of stuff, but obviously what you learned is not helping you, so you are new. Do we all agree with that, sort of? It's possible you're making money doing things I'm about to warn against, but it's unlikely that you will continue to make money doing things that I'm about to warn against. Let me say something else. I have a little blurb here that I didn't put on the slides anymore, but I think now is the time to say it because that last paragraph addresses it, about the test of time. This is really important. Matter of fact, so important I may even repeat it toward the end because I know there's a lot of people that tend to log in. We only have about half the crowd here. People tend to filter in after the opening minutes here. They don't want to hear my boring preamble to the whole thing. When have you made it? This is not on the slide, so don't look for it. When have you made it? In trading, you're only as good as your last day, your last week, or your last month. You guys agree with that, sort of? It's kind of not true, but it's kind of true. The learning process never really stops. Now, I don't want you to get scared about that. The learning process never really stops. Now, I want you to not be afraid of that comment. I am not saying, because you guys know me, I'm not saying, as a matter of fact, I'm the person who makes fun of anyone who says you have to learn new strategies and blah, 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 blah. That's crazy. You learn how to read a chart and that's it. It's good today, it's good yesterday, it's good a year ago, it's good 10 years from now. I guarantee you, it will never change. But when I say the learning process never stops, I'm talking about the process of you doing what you intend to do, and the process of you understanding yourself, and the process of you taking what you know. You don't have to learn anything new, but taking what you know and adapting it to a changing environment. In other words, when things change in the market, we go from bullish to bearish, from bearish to bullish, we go from big moves to little moves. All those things are taught to you in your chart reading. There's nothing new. I mean, you don't go and take courses to learn bullish strategies and, oh no, the market's changing, what do? I better go take a class on bearish strategies, and oh no, now the market's kind of going, that's not what it is. You learn everything you need to know, but that doesn't mean you're not always continuously learning at some level. Does that make sense? Everybody, does that make sense? It's kind of a tricky fine line. Got it? And it's really an important thing that I want you to understand, because you know what a common excuse for people is kind of, if you're struggling, you know what I see all the time? And again, this is such an important point. I see people that have maybe 90% chart knowledge. In other words, in my mind, they have enough to make money. And they're not making money. Why are they not making money? Well, at the end of this presentation, like the end of every presentation lately, I'll show you a little three-legged stool. There's three things to making money. One is superior chart knowledge. Two is psychology. And three is math and probabilities. I'm really big on math and probabilities. It's part of that whole thing being a moment in time type of concept. And I see way too many people that they have 90% knowledge of the chart. 90%. And they're not making money. And what do? You know what they do? They go and they try and do something to get 95% chart knowledge. That's not going to help you. They have zero concept of psychology, math, or probabilities, whatever it is. The other two things they're completely stupid about. And they keep trying to prove the one thing that they kind of know. So it is a balance. And yes, you need, I like the phrasing that I use when I talk about it. You need superior technical understanding. Superior. Not just okay, not just, oh, I watched this video about support on the website. Most of what you learn is far too incomplete to really have you making money. So continuing in my little statement that I didn't put in here, the worst trader in the world can have good days and even good months sometimes, but they don't make it by the end of the year. The test of time is what matters. Guys, sound check real quick. How's the sound? Sound okay? Because Eric, if it's maybe just you, there's nothing I can do unless you log in again. I think we're all good, yeah. If everybody's good, the test of time is what matters. The test of time is what matters. You know how to read a chart as it changes. And there's a statistic I mentioned in the room today, and some people were shocked by it, but it's absolutely true. In 1999, when I started, I was dumbfounded because I'm looking at people that I thought were idiots, and they're all making money. They're all geniuses. Do you know how many day trading professionals there were in 1999? Just unbelievable. Up and down the street, all just anywhere you could turn into a barber shop and meet four professional day traders. Guess what? In the year 2001, I'm going to type a number on the screen for you. 97% of E-Trade accounts they call it dormant. You know what dormant means? It means they're not trading anymore. You know why they're not trading them anymore? Because there's not enough money in there to do anything with. There's like $52.13. I want you to be very, very aware of that, concerned of that. You know, I'm not the scare tactic guy, but it's just a fact. And you know, there's right and wrong ways to make money, and just make sure that if you're out there new trying it, we're in a little bit of a goofy time, and make sure that you understand what you're doing. Okay? Enough said. Let's get on after the preamble. Rookie sayings. This is sent around somewhere sometime. I'm not going to read it. It's just, you know, blah, blah, blah. Just words on the screen. If you want to read it, it's in an email you received. All right, number one, rookie sayings. You're probably wondering what this is all about. I allude to these sometimes when I'm doing other presentations. I finally decided it's time to take and put them all together, and I think this is actually going to be an above average presentation. And I don't always say that. Once in a while I say I think this is going to be a below average presentation, but I think this is going to be a very good one for most people. Okay, rookie saying number one. This stock is getting the action. That's rookie saying number one. And it comes under other names, AKA, also known as, this stock is flying. Everyone's going long this stock. This stock is really giving huge moves. You got to trade Bitcoin. These are what I call rookie sayings. Let me explain why. Let me give you a couple of questions first to help you understand my mindset. And remember the little introductory slide that I gave you. You may not always agree with me, but I think when you understand what I'm saying, you will agree with me. Here's a question for you, and some of these I'm going to have you start answering so that I can have a sip of my Coca-Cola. Do you make more money if a stock moves $3 with a $1 stop, or if it moves $1 with a 33-cent stop? Which way do you make more money? That's a real question. Go ahead. You can put A and B if you want to, or you can type the whole thing, $3 with a $1 stop, or whatever you think the answer is. What do you think? How much cash, gross, I'm talking about? I'm talking about gross cash do you put in the account by what I would consider to be the only proper way that you should trade. And when I say trade, I'm including investing. Everything tonight also includes what you might call investing. Long-term trading, day trading, doesn't matter. This is not a day trading class. This is a trading class, and it includes long-term investing. You make exactly the same dollars. At least you should. If you don't, there's another serious issue going on, but it really doesn't matter, because you should share size and attend the next Friday seminar, half-day seminar if you don't understand. But you should always be risking the same dollars. In other words, you decided ahead of time as a day trader, I'm going to risk $1,000 or whatever you're risking, doesn't matter. Let's say $100. You're going to risk $100, right? That means with a $1 stop, you could have 100 shares. You make $300 if you're right. With this, you'd have 33 shares. 33 shares, and you'd make $100. Either way, you are making the same R units. In other words, if you have a 33-cent stop, you can have 3 times the shares. That's what I'm trying to say. You can have 3 times the shares. So you end up making the same amount of money. So the question then becomes, if you're looking for a stock that's going to have a big move, a $6 move or whatever it is, if true or false, if you're looking at a really volatile stock that's moving all over, and because of that volatility, it may get a $6 move or whatever number you want to pick, it's going to have a 3 times bigger move than the average stock you normally look at. Isn't it true the stop is also going to be 3 times bigger? Is that true, would you say, just from the book of common sense I like to refer to? Isn't that true? If the stock is so volatile, it's going to move 3 times as much. The stop will be 3 times as much, right? Now, sure, you could find a cute little stop on it, but you could do that on any stock, right? So where's the advantage then? And then the disadvantage becomes, with that volatility, guess what happens with that volatility? Just that bouncing up and down more tends to take you out of plays more often. I make a big deal out of this because, again, this is what I call a rookie saying. People are attracted to these. Why are they attracted to them? Because they think, wow, all I have to do is get a hold of that stock at the low of the day, take these many shares, and boy, I'll make my whole month. You know, that's what the way they look at it. But they don't understand they're making things very difficult for themselves. And I do this with the intent, again, of sometimes maybe just helping you see what you're doing. If somebody doesn't step in and say, hey, is this really what you want to be doing? Because a lot of times when people struggle, they don't really know why. And maybe you are constantly drawn, and I know a lot of people are, run a trading room for years, and new people come, and the things they email me, things they say, the people that email me, I'm in touch with traders constantly. And it's a very, very common thing. Oh, look at this, look at that. And it's always some, the crazy newfangled thing that is just blowing up. Let me ask you another question here. Even if you're a good golfer, we got any golfers in the group? Any golfers? Give me a 1. Because if you're not a good golfer, this is kind of a stupid question. But if you need any good, I'm not a good golfer, by the way. I'm this for Brady. Come on. All these people here, somebody's a golfer. All right. If you consider yourself a good golfer, question for you: could you beat Tiger Woods if Tiger Woods was forced to use a set of $50 golf clubs out of a garage sale? There they are. Could you beat him if you made him use a $50 set of clubs? I remember there was a story about some famous pool player, billiards. I don't, Willie Mosconi, or I don't know who it was, but he picked up a stick out of the yard, out of the back of the place, and he beat a really good amateur pool player with a stick, literally with a stick. So it's not the tool. It's the hands of the person it's in, correct? That's what really matters. And it's to me, this is the same topic we're talking about here, right? It's the same topic. It's the tool, the skill. So it doesn't matter what it is you want to trade. I don't care if it's a stock. I don't care if it's a Forex pair. I don't care if it's Bitcoin. There's no magic. The dumbest comment I hear, and I've said this in a recent thing, so this is a repeat, but the dumbest thing I hear is, I can't make any money trading stocks. I'm going to go trade Bitcoin. I mean, are you just insane? It just makes no sense. It's like saying, what it's like saying? It's exactly like saying, I'm not really good at driving a car. I just can't keep it in the middle of the road anywhere. So I'm going to go drive an Indy. I'm going to drive in the Indy 500 because This thing out on the road where you're just going down yellow lines, that doesn't work for me. It's the same thing. It just makes no sense at all. Either you can drive or you can't drive. Let me show you. And again, yes, I have picked an exaggerated chart. The instrument doesn't matter. I have picked an exaggerated chart here to make my point. But you know what? I can find dozens and dozens and dozens of these that are this extreme. And you know what is more important? Is that there are varieties of this chart that you're probably trading right now. I guarantee you a lot of you are looking at this stuff. And again, I want to emphasize the very first slide. Maybe there's a couple of you who have come to specialize in this and you're finding your niche. Okay. But the vast majority of you are getting slammed trying to do this. Here's a slide. SRNE. What a move. You're scanning, you see this great move, you see a stock gapping up this day, and you go, what a great move. Yeah, but FT, that maybe you did at one point, and there's a lot of people that, no, never, okay. But trust me, there's a lot of people that do, an awful lot of people that do. And again, let's run through it, and please feel free to participate here as we go. These are the novice rookie comments over. I want to be part of that new high. Even if it tests the old high, I'll be making a killing. And it's gapping up this morning. So, okay, so this morning here we see it gapping up. And you decide, well, okay, gapped up, try to buy that gap, not working so well, but that's okay. Because you know what? When this stock goes to 11, 12, 20, 30, I'm going to be rich, right? And you will be if it goes there, no question about it. Okay, the gap got sold, but now it's pulled back to the fib line. You know what fib is, a Fibonacci. He's a really good guy. So now we're at the fib line, so I'm sure this is going to work from here. And boom, there we go, right? We're underway. Here we go. So here we go, we're underway. Boom, little red bar. That's okay. I'm sure we'll get going here. No problemo. That's Spanish for no problem, in case some of you are not as bilingual as I am, or in case you don't watch Arnold Schwarzenegger movies. Oh, look what's there. Anybody know that? Anybody know this? Anybody know what this is right here? That is the famous or infamous, I'll say famous. Well, it's a doji, fire tower. It's a doji. That guarantees that we're going to be moving up. There's no question about it, right? And okay, we gapped up and we're looking good. I'm underway, on the way to 30. On the way to 30. Here we go, on the way to 10, 30, whatever it is. Okay, a little stall. That's understandable. I get it. Understandable. Just a little hiccup. No problem. Okay, nice pullback. You know what? That's such a nice pullback. I should maybe add to this even, right? I think maybe I should add a few shares. What a great pullback. Green bar. All right, here we go. We are underway. Another little doji. That's a good thing. Somebody told me dojis are a good thing, right? And okay, that's not a problem. Little bar, not a big deal. And I don't think I like that very much. Son of a gun. Well, a little bottom tail, maybe I'll be okay. Gaps down the next day. Okay. Well, that didn't work so well. I'm going to keep watching it though, because maybe I can get a better entry next time. Forget this stupid. Oh, look at this. Look at that. It's starting to move up. You know what? You know what I did? Son of a gun. There, it's starting to move up. And I got shaken out of that thing the exact moment that it was starting to move up. I should have just got in right there. So here we go. I'm getting back in. And we're underway. Because this thing's at $4. And when it goes to 20, you know how much money I'm going to make? It's going to be unbelievable. And then, of course, from here, we just kind of coast into the abyss. And actually, it's going to take us right up to today. Boom. Today it moved up a little bit. But there are so many false starts. There's just so much, just what I call sloppiness. Now, maybe on day one, that was some kind of gap concept, which it very well could have been. I have no problem playing these on the way up initially. That's not the problem. The problem is once the entire world has bought it, and it's one of those rookie sayings. Gee, everybody asks everybody else, does everybody like this? Is everybody in this? Is this a good thing? Look, the whole world's buying it. I think now that the whole world's bought it, I think I'll buy it now. That's what people say almost literally, which of course is completely 100% backwards from what you have to do. You have to be, like I like to say, the second person through the door. A similar thing, and I want to show you two others kind of like this. Go to sleep while it coasts out here. Boom. And here's the thing. a month of nothing, or losers. Here's a question for you, and this is the killer. You play this, really kind of wild stuff, and as I explained to you, theoretically, you don't make more money because it takes more on the stop area in order to accomplish your task, and it gets so sloppy you start stopping out. But what if you do hit this? What if you do get this right initially or after 3 losses? How much money do you make? How much money do you make? And I don't mean a dollar amount, because we're not using dollars on here. How much do you make? And I'm not even counting the fact you have to pay for your losses. That's not even my point. A new trader, you try this, you stop out a couple times. Let's say you stop out twice, and then you start moving up to that big, huge target that's going to make your huge month. How much money do you make? You could actually give me kind of a number. How much do you make? You know what you typically make? You typically make enough to pay for your losses. Is that true, everyone? Right? I mean, theoretically, yeah. If you did this trade perfect and it did go to 10, maybe you'd make months. Maybe you make $10,000. Whatever you're risking. Maybe you make a whole month's salary, whatever it is for you. But you know what happens? You never take it to 10, right? Because you start looking around, you start saying, you know what? Boy, I've had a hard time with this stock. I've got 3 losses under my belt. You know what? If I sell it, right, Derek? If I sell it here, you know what I could do? I'd be break even. And then you know what I can do? I can just go to another stock and try it on that one. Does that sound familiar to anybody? You ever been in that cycle? Loser, loser, winning trade. You know what? I think I'll just break even now. I'll just, take my money and I'm back to zero. Anyone out there, even if you don't do it anymore. Does that sound familiar? Do you relate to that? Because it's a cycle people get into where you are literally now set up a plan where your goal is to break even. That's your goal. That's the height of your possible achievement. You're trying to break even if you can. And this is what this type of trading sets up. And you know what? It takes really a long time to understand this, that this is what happens. And if you're out there by yourself and you're floating around doing this, remember, most people who just go try this lose. You have to remember that. I'm sure whoever you are listening to me, you are smart and you're above average and you're good at most things you do. Everyone that tries this is, but most of you lose, and you have to think a little differently. And this is one of the traps that people get into, trying to make the quick buck, get the big move. It's hard to do, and then if you do it, it doesn't pay you because you don't hang with it. Here's another one. Paul, you don't understand. I get that a lot. You don't understand. Bitcoin is a big deal. Oh, okay. This is Riot. I'm not even sure exactly what the relation is. Some kind of Bitcoin thing. I don't really pay attention to this stuff. But here's Riot. So wow, this so this thing catches Riot. This has had a huge move. By the way, again, I want to emphasize: there's nothing wrong with getting a strategic play out of the ashes, out of the dust on the way up. These are some of the things that I like to do. They're hard to find sometimes, but if you nail this somewhere on the way up, that's great. That's not what I'm talking about. I'm talking about when every man, woman, child, stepbrother, stepsister has already bought this stock, and now they're all dumping it, including all the big funds, right? And then you decide, because you're smarter than the rest of the world and you're smarter than every fund out there, you're going to buy this pullback now. See, this is not a buyable pullback. These never work. I'm going to say never. And I'll let you prove me wrong. These never work. 0% of the time. You don't believe me? Please email me and show me I'm wrong. I'm talking about something that goes from 2 to 100 and then pulls back. So I have to get this new rally. You know why? Because all it has to do is just go back to the old high, and I'm rich, right? That's what they say about silver, the silver commercial. So here we go, and we're off again. I have to have this new rally. Well, not a good start. Gulp. Wow, that was either very painful, or you got out and you're upset, and then you say, you know what? Here we go. I got out a little bit too early. Let's try it again, and bam. You got whacked again. Now we're all the way down to 10. We went from 50 to 10. It can't go lower than that, can it? Yeah, it can. This is back in 2000. I'm going to just zip through this real quick because I don't want to spend a long time on this, but you get the idea, obviously. It says on and on. So this is March of 2018. So I'm just going to, move the chart ahead as if you were on your platform and you clicked to the right. So we're going to go from March 2018, boom, there we are, April 2018. And this is where, look at this. Isn't that a beautiful breakout? Isn't that a breakout play? Fire Tower, isn't that a breakout play? That's a breakout, right? No, it's not a breakout. It's an idiot play. Bounces, as soon as you pop I call this some of our students, what do we call this? What do we call this? A stage one? No, we don't wake the mole. It's a whack-a-mole. It's a whack-a-mole, yeah. So boom, you pop your head up and you get whacked, and bam, 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 down we go. So now we're all the way down to $5 at the end of July, and then keep on going. Boom, boom, boom. Another pop here. Okay, so here we pop up to $8 going to the end of July. That's got to be great. And there's your $8. And from that pop, you see that pop there? Because again, we're skipping that pop right there. Right there. That is that. That's deadly. Look at that. Wah, 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 wah. All the way down to 2. Anytime you tried to play this long, anytime. This was the strongest stock in the world. And anytime you've played it, you've done nothing but lost money. As a matter of fact, I would say it's virtually, could you tell me you found a spot where you made some money? Sure, in hindsight you could, but why would you do this? Why would you try to do this? Yeah, it's funny you said that, Lewis, because I'm going to talk about that in a couple of slides. Boom. And here we go. There is a tradable bounce. Now, that's what I call a trade. We've gone from $1.50 back up to $4. That's a great move. But you know what? Go back and look. How did you know that was the move? Look at that. There have been literally 30 different bounce attempts, all of which failed. But this is what traders do. They go look and they say, oh, Paul, look what you could have done. No, you couldn't have done that because there's no real pattern. And yes, in hindsight, you can go back and say, gee, this happened, but you're playing with crap all the time, right? Yeah, Mark, none that really, they defended it. Oh, okay. Yeah, of course, none of that matters. You're losing money, whatever the reason is, of course. And then here it is, and there's that pop. And look at that pop. If you didn't play it absolutely perfectly, again, you're toast. And what's funny is, all the way down to $1.20. And here we are today. Is this going to start moving up today? Now, the reason I bring this up is because people will say to me like today, oh, Paul, Riot is Bitcoin. Boy, this is really a nice chart. And I'm like, come on, you got to be kidding me. This is not how you make money. Can you make money? Sure, of course you can. Let me remind you of some of the words I said earlier. The test of time. Let me see you make your living doing this. This is just sloppy, all over the place garbage. And the reason I bring it up again is because people are attracted to this. They're drawn to this, right? Yeah, sure, Mark. Yeah, it doesn't matter. It simply doesn't matter. If you go the other way, Mark, though, and it went higher, somebody would say to me, oh, Paul, it's all the short covering. In hindsight, make up whatever it was. It simply doesn't matter. The point is that these charts are falling, and you don't touch these. You don't try and get the bottom on these. This is what they mean by trying to get a bottom. Now, I try to get the bottom every day. The bottom of a day trade in an uptrending stock. That's a big difference. That's very easy to do, relatively easy to do. But trying to get the bottom of the bottom of the bottom of the bottom is ridiculous because it often never is a bottom. This, as a matter of fact, it's kind of funny because what you just said, Lewis, was, years ago, I'm not a big fan really of doing climactics. Not the full-fledged, all-out, in other words, when the stock is free-falling everywhere, trying to grab it occasionally. I like the little ones intraday. I don't want to get into all the details, but for a long time running a room, people would constantly be drawn to climactics. And all the time I'd be getting people saying, Paul, got to go long, or look at this stock, this, and let me draw you the chart, the stock would be on the daily and then intraday be free falling. And they'd be like, climactic, buy, Paul, we got to go long this thing. And I'd look at it, I go, no chance. It's not going to bounce from there. As a matter of fact, I started saying to people, I guarantee you that's going lower. I guarantee it's going lower. And then I keep the stock on my chart and show them later. Look, it went lower. And finally, it dawned on me one day, everybody's trying to find the bottom of a climactic. Why don't we just short before it goes climactic? Which is, I understand there's lots of short plays you can do, but at some point the stock becomes too extended for me to short anymore. But what's funny is when it goes climactic, all of a sudden the wheels come off. And you just can kind of short it until it goes climactic and it works. I call it a pre-climactic play. It actually has become something I like to do. I don't see it that much because I don't hunt for them, but I actually have come to like it. So in other words, taking what novice traders like and doing the reverse of what they're trying to do is something that works well. And it's the same thing with this setup. I actually have come to put charts on my list that are these type of terrible buy setups that I know people are attracted to. Let them bounce a couple days and then look to short them. And they actually work quite well. So don't be on the other end of that. Note here myself, people looking for the flash. Let me give you one more little thing here, because again, it's the hype, it's people reading stuff, it's people trying to become fundamental, whatever it is. Here's fuel cell. Now, this is kind of weird coincidence, amazed because I was looking at it yesterday. I played fuel cell today, which really has nothing to do with the point of this whole thing, but this is, again, the comment I'll get, and this one is really hysterical. I mean, this just cracks me up. I mean, somebody who actually said this to me was really embarrassed. It was in an email. They were like, Paul, fuel cell, Ballard Power, third one. I forgot the other third one now. These are hydrofusion stocks. They make cars run on water. Plug, thank you. Yeah, yesterday I knew Plug and I forgot Ballard Power. Now I remember Ballard Power, I forgot Plug. They make these things run on water. Paul, cars running on water. This is fantastic technology. I'm like, okay. So you found out about this because your neighbor is the CEO of Fuel Cell and nobody knows about this yet? This is a secret technology he has in his basement? And no, but isn't that a great idea? I mean, how can these go wrong? So looking at this, wow, this thing's at $2. Ground level, right? Is this a ground level entry, guys? Ground level entry to fuel cell? Moving up from $1 to $2, this thing's going to fly, right? Isn't it? Just put this in your long-term account and go to sleep for a few days. How many people think this is a great ground level entry? Meaning this thing is just coming out of the ashes, beautiful thing, new technology. Yeah. Here's the monthly chart of fuel cell. Split adjusted, it was up to $682.56. This is old crap. This has been around for a decade. I remember Plug half my trading career ago, new technology, 3D printers, Bitcoin, all this stuff that's all the rage. Now, don't get me wrong, there's some stuff that can be, when it becomes newsworthy, sometimes you get some nice charts out of it. I'm not saying that. I'm saying that just saying, oh, I got to have fuel cell because of this new technology is just simply insane. Cosmo. That Radio Shack's going out of business. I mean, guarantee you. I can almost guarantee you it's going out of business. Oh, how about this? How about this? Forget the hype. Forget all advice on stocks. Forget about your cousin's, brother-in-law's, sister's, attorney's second wife who knows a guy who once traded this stock. Forget about the news in general. That's right. Completely forget the news in general. The news is completely worthless to you, and I've proven that many, many, many times. If I could just carve out a piece of my brain and email it to you, it's just so obvious. The news is so completely irrelevant in terms of understanding what's going on. And obviously, I don't want to get into the whole thing, but I'm not saying that news doesn't change things. It's just that it's all in the chart. There's nothing you can do with the information of news. How about forgetting about getting the low when you have no clue what a low is, right? People totally ill-equipped to trade at all, trying to find the low that even the best professionals have a hard time with. How about forgetting about how much money you could make, $52 million, if some unlikely event happens? This is a common thing, justifying trades. But Paul, if it does this, you know how much money I'll make? Yeah, okay. You know what another good analogy to that is? Go down to that little corner gas station where they have these little convenience marts. And you know what they sell there? They sell lottery tickets. Do you know how much money you can make with a lottery ticket? You know how much you can make from a lottery ticket? Seriously, you can make a heck of a lot of money. But it's the same thing. These charts people are looking at sometimes. It's like the worst thing in the world could ever happen to you would be to have one of these charts actually work. And I say that not in jest, because I know a couple people who are really struggle, I think, because they had a home run trade. They got that 1 in 1,000 trade, and that's all they look for now. They look for the 1 in 1,000 trade, and they've gone through 900 trades, losing all the time, trying to find that 1 in 1,000. This is how about forget all this stuff. This is not what we should be doing. How about we focus on what the stock or Forex pair or Bitcoin futures contract, I don't care what it is doing. How about focusing on a chart with precision, and how about keeping it simple? How about focusing on making money, period, bottom line. Now I want to show you something that's almost embarrassing. This is right off the chart from today. There's people in the room with me. If I'm lying, they're going to scream at me, right? As a matter of fact, if you guys at some point wouldn't mind giving me a thumbs up, this is all true. Um, at open today, this actually was, right, everybody? This was my number one hot list watch, right? Is that true? This is number one for me. I traded first thing, 9:31 in the morning, right? This is number one, right? And this, you know what this was? This is a CLF. It just had this little consolidation. Scanning charts, prep for today, boom, found this, really liked it when I found it, and it was just having a little tiny gap down. It was just, just a little bit below this area, right in here somewhere is gapping down. So I saw that chart and my heart skipped a beat or two, and I said, hey, just what I like, right? And again, this is where I can tell you there's a lot of little different ways to make money. Please understand, everything I told you up to now, I feel is if you do any of that, I think it's wrong. I think you're going to get killed. I think you're going to get slaughtered. Stop doing it unless you've proven somehow that you can make money doing that. Here, I'm not saying this is the only thing you can do. As a matter of fact, I do 3 or 4 things typically I really like. I know 30 other things I could do, but I typically stick to my favorites. And there are different ways to make money. But this is one of the little ones that makes my heart go pitter-patter. Okay? Now, when I saw this chart, I want you to get in my head for a minute here. I did not care about what, if any, news that maybe made it gap down a small amount. I didn't care what CLF did last quarter. I don't care if they made any money at all last quarter. Heck, honestly, I don't even know what they do exactly. I know I used to trade Cliffs, and I guess it is Cliffs or is combined, and I'm not even real sure what Cliffs is. I think they're mining or copper or something. I really don't know. I just could care less. I just don't care. Focus on making money. What I did care about was this. Here's what I cared about. What the hourly chart looked like. That's usually my initial focus as a day trader. What the daily chart looked like. The daily chart has to give me a thumbs up because that is something that will often kill your intraday plays. What the 5-minute chart looked like and what it did at the open. Focus on making money. So here's what I thought in my head and then said to the members in the room very simply. It's gapping down. If this thing rallies, that's my trade, right? I just want it to pop. If it can pop, I'm willing to take, let's call it a bet. I'm willing to take the bet that if I can short it up here somewhere, it's not going to go over that base. That's all. I consider it to be a bearish base with my understanding of charts. I consider it to be an unlikely event. And actually, what happens a lot of the times is it ends up gapping down too much or it falls too quick and I don't get it. There was no guarantee I was going to get this, and that's why I keep several stocks on my screen. And they're all like this. They're all things where I don't know the stock, I don't care about the stock, I don't know what they do, I don't care what they do, I don't know anything. All I know is that this is very tradable. That's something you have to have if you're trading the opening 10 minutes or so. You have to have a tradable stock that's very tradable. And then I have to have my setup, and then I have to know what my entry is. I have to be sitting there at whatever time it is, at open or at noon or whatever time you're stalking. I call it stalking a stock where you're looking to get into it, or a Forex or whatever it is, and you have to say, here's what this stock needs to do for me to enter it. That's critical. You don't chase things, you make them come to you. And if it doesn't, you go to the next stock. That's why I like stocks personally, because I can say, no stock, you're not doing what I want, go away, I'll look at something else. This stock was my favorite, it just happened to do what I did. So it ran up. Boom, boom, boom. Post goes out to the room. I did clean this up a little bit because it was over 3 posts, but CFL short, that's as close as I can get to the word short. 564, 572, and that's a little shortcut for the room. It means short under 564, stopping. And notice where that short is. It's right up in here. I'm not waiting for it to make a new low. That's irrelevant. Doesn't mean anything. My concept is it will not go over this top, and I want to get into it as soon as I see that buying stop. Now that's one strategy. Now I don't do everything like that, but that's a strategy in this case. How simple is this, everybody? One little pattern I look for. I find maybe a couple a day on average. Maybe one of those two, or maybe neither does what I wanted to do at open, and I go on to something else. Right? Wanted the pop, got it. Perfect entry. I got to say it was a perfect entry. Right? But that was all I was really going to take. So then 5-minute chart, boom, boom, boom. It rolls over, boom, boom, boom. Target 1. No coincidence, 10 o'clock reversal time. Got a nice pop, trailed it right down to there. Target number 2. There's a summary of the trade if you can read it. I think you can expand if you wanted to. So almost for what I do, almost like the move was a couple days worth of profit on one trade. It was all over by 11:30. And by the way, I'm not sitting here staring at this thing at all. For somewhere in here, I moved the stop down, and then when I got in, actually the first target, I just picked a target of 552, so it just hit it. And then you let it trade a while, you walk away, you get some coffee, go walk the dog, you come back, you say, okay, now I'll put a stop down to here. Once I'm down here, I'll put the stop to here. And then I didn't have a second target. At some point, I jumped in and said, okay, it's kind of in a free fall. Notice, to me, this is where I like to take a target, is not to guess where it may drop, because I could be off by a huge amount, but to say, look at that little line, and this is what I call acceleration. Once it accelerates, then you come in here and you start trailing it real tight, using what I call a tick chart pivot, but don't need to get into that now. So this is what I call, guys, precision. And my point is, this is a very liquid stock. You could buy all the shares you wanted to. You could be risking $2,000. You could buy the shares you wanted to, or short the shares in this case that you wanted to. And my point simply is that this move makes more money than a stock that moves $6 if you needed a $4 stop to get into it. Does that make sense, everyone? I can't emphasize this enough. Everyone out there, I'm going to take a little break here. Questions, comments, am I getting through? And again, you don't have to love me or necessarily agree with me. But if you are struggling, and if you've been at it a while, I just want to hit you over the head with some stuff that people do. It's this simple. Oh, no. God, no fire tower. No, it was like just under 2. I'm not sure how you're figuring 3 7. Yeah, it was just under 2 hours. Yeah. Does everything up to now, folks, does this make sense, what I'm saying to you? Precision instead of these big, wide, sloppy, crazy things. Now, what you do need to know, you do need to kind of know how to read a chart, how to know that this is something you want to do. I mean, yeah, you got to learn that. And again, I'm not saying this is the strategy we all do. I'm not saying that at all. I always refer to that book, New Market Wizards by Jack Schwager, where he interviewed 25 successful traders looking for the one thing they did in the market. He found they did 25 different things. Now, I'm proud of that. The people that study under me end up doing slightly different things, very different things. There's a lot of ways to make money. But this precision, understanding a chart, knowing where it's going, getting the right entry. Entries are huge, guys. You know that entries generally in this whole concept of trading, they're not even taught really. I know you learn an entry. It comes with the strategy. Most entries stink the way they're taught. Entries are everything. You got to get that right entry. It's critical. And to get the right entry, you have to have confidence in your chart pattern. You have to know what it's going to do so you can get a perfect entry. Okay? I wrote here a note to myself to say on the side, painfully simple once you know what to look for. Learning that is a process. Simple after you learn it all. Oh, again, I want to say this little comment whenever we talk about keeping things simple, and it's this, is that I really believe in keeping things simple at this level where I am right now. But in order to make things simple, guys, what do you have to do first? What do you have to do first? I see your question, John. I'll get to it in just a second. What do you have to do first? Before you make things simple, what do you have to do? I mean, the word I'm going to, understand, that's the polite word, but there's kind of you have to kind of make things complicated before you can make them simple. I hate to say that, but you do. There is on the website, on the free stuff page, this is a while ago, but I haven't mentioned it a whole lot. On the free stuff page down at the bottom, we added a new section that has all the educational emails now that have gone out. And I know from my head, I know one of those there was an article titled "The Grass is Always Greener." And it's kind of about this topic. And it's one of the biggest reasons that you have to make things complicated first, because you really need to understand what in total is involved. Because if you don't, you'll always be wondering, well, what's around that next corner? Well, what if the stock did this? What if that? What about Bitcoin? What about options? You have to wrap your head loosely around everything and then focus in on making it simple. Does that make sense? Another way to maybe say that is somebody said to me once, Paul, I can never learn what you know about charts. I said, you don't have to. You don't have to know everything I know about charts. You have to get a general sense of what I know, and then you need to specialize on the one or two little things you want to do, like this pattern. You need to specialize on this pattern. I have people take my classes, they do it all the time, and I'm very proud of them. A lot of times they come up with great looking little setups. Rick, somebody just emailed me 2 days ago, you're probably here, whoever you are. And my email back to you was, I think I just said perfect. You sent me a trade review. And I said, absolutely perfect. My only complaint was, why didn't you tell me about it? I would have done it myself. It was absolutely perfect trade. Just something I would absolutely do. And I don't get to say that a lot. Making it simple after you learn everything. But what in life do you not have to do that? Tell me what it is that you just pick something up and it's simple on day one. Virtually nothing. I mean, everything's relative, but everything has some kind of little learning curve, and you have to go through the curve. But then you keep it very simple. So boring. I show people this stuff, and it's just so boring. So boring. To me, that's so wonderful. I don't want excitement. I don't want stocks that are all over the map, and you're guessing to get the right entry. I don't want that. I want high probability stuff. And again, you can make all the money you want just on normal, everyday stocks if you know how to enter them. That's all. The only thing you have to do is, if you're trading larger risk amounts, you have to make sure you trade stocks that are somewhat liquid. That's why I keep a list of 300, I call it my hourly list. I look at every morning, and there are 300 highest volume stocks. And most of those are tradable right at the open. I mean, sometimes a couple aren't, but generally speaking they are. And then, by 9:35, 9:40, 9:45, 10 o'clock, they're all tradable. And by the way, everything I'm saying to you, I want to emphasize again, this is not just day trading. This is exactly how I long-term invest. Matter of fact, this strategy right here is exactly what I do on bigger time frames. It's no different. And yes, I don't care what the stock does. And yes, I don't know what their earnings are. The only thing I care a little about it for long term, I just want to know the industry. I don't want to take home a biotech stock sometimes or whatever it is, I want to make sure. Most of the symbols I know what they are because I've just been around so long. But I do want to know if it's not a market stock, if it's gold or something like that. But other than that, it's who cares. I know that shocks some of you. I know there's a sense out there for some people that they want to earn their money. I sometimes, just to teach, I like to get a sense from you guys. Does that ring home with anybody, either now or in your past, that you feel you need to earn your money? You got to go study the stock, know what they do, know the financials, know the CEO. Does that ring true with anybody in your past? Were you ever been there? And maybe just not even fundamentals necessarily, but you feel like you have to earn your money, right? So you have to shake that in trading. You have to shake that thing. You don't have to earn your money. It literally is a video game. It just absolutely. And you know what? More and more, you're hearing some people say that. I'm talking about big people on TV. More and more, you're starting to hear that. And especially this last 2-3 months. It's just a video game. You can't tie it to reality. And I'm not saying that there's not some connect, obviously. We have a good country and good companies and good earnings and markets up. And yeah, there's some vague correlation there. But you can't trade it. You can't base anything on the above, right? Let me do one more thing with you here. And this next one, I think you'll like it. It's a big deal. When people are trading, what are they always looking for? When you're looking at charts, what do most people look for? Give me some answers. When you look at a chart, what are you looking for? I don't mean like the setup name. I mean, just what are we trying to get? What's the goal? When you're scanning, what are you typically trying to find? Unique? Well, that's actually a real good answer. Yeah, that's exactly what I like to call things. Good entries. Okay. Well, when you're scanning, we're not even on entry yet. Direction. Okay. Rally in a downtrend. Okay. But isn't it fairly typical? And I do sometimes. Isn't it fairly typical to try and look for kind of like a breakout, a big mover, or something that's going to have the big day, right? Isn't that true? Sometimes we look for the big moves, right? The breakout, right? Do you realize that like 90% of the time that stocks are not making big moves, they're just, I call it coagulating sideways? Do you realize that? And also, do you realize that 97.4% of all statistics are made up on the spot? When I said 90% of all stocks, that is pretty true though. I mean, most stocks on the typical day are just doing nothing. But yet, what do traders do? They try to play them for the breakout, and then they struggle every day. Why not just cooperate with the stocks? Why not just do what they do? This is Piton, right? Now this stock, well, it's confusing here because you're on a 5 minute chart here. But well, let me pull up the 15. Here, there's the 15, right? What most people are doing is trying to take this above this green line, right? In other words, if this stock right here goes above the green line, that's where they get long and they get slaughtered. What I like to do is like even play the inside day. Play the inside day. In other words, this is the P-time 15-minute chart Thursday. This is from Thursday. Why not just simply say, hey, instead of trying to play that breakout, just play it up to the point it's going to break out. So you get long here. And you just get boom, boom, a couple of little pops. Makes your day. It's all you have to do. Lewis, I will show you that because I think it's a great educational thing. Because yes, I knew it to the penny. I chose not to play it, and it was the most perfect examples that you've ever seen. Actually, you learned it 3 Saturdays ago, Lewis. But I'll review it for you. Well, let me stop here for a minute. But think about the beauty of this is that instead of looking for the albatross, right? Instead of looking for that 1 in 10 stock and hoping you get it, why not look for what just happens every day? Yeah, I did say take a picture of that today. Yeah. I'll show you the stock because it was a good thing. But do you hear what I'm saying, everybody? We somehow get focused, get tuned in, get educated, read or whatever, that we look for the magic. And why not play the mundane? Does that make sense when I say it that way? Why not play what stocks give you every day and learn how to be precise rather than looking for the home run, the hole in one, whatever analogy you want to use. Now, let me back up first. We had a question up here. This is a good question. John S., are you still there? Did I bore you to death? Do you watch pre-market action before open for this stock? Okay, John, it's going to shock you. Absolutely not. Could care less. Pre-market charts are a crock for the most part. I don't mean that they're not real. They're real. They don't. You know why I don't look at them? Let me clarify that. John, when I'm before the market opens and I'm looking at the gaps and the moves, I do have a pre-market chart up because I just want to see where it's been going. I want to see if it started last night, started this morning. But what I think your question was, do I care about the pre-market levels? And the answer is no, absolutely not. And you know why? Because of something I say a lot, and that is because a pre-market chart on my screen after 9:30 never made me a single penny. Now, when I say stuff like that, it's funny. Sometimes people go, you know what, Paul? I thought that for the last 2 years, but I'm afraid to say it. Everybody says, pre-market charts to me are garbage. They just don't work. Look at them. Now, occasionally, you have a huge high volume inflection point somewhere, and maybe I'll make a note of that in my head. But for the most part, number one, they're light volume pre-market. Number two, a lot of key players can't actually play the pre-market. So they come out, just become they're just traders playing with themselves for the most part, and they become irrelevant levels. So I do not care. Once the market opens, John, the pre-market chart is gone. It's just for looking at stuff before we open, okay? And let me, since you asked, and it was such just a nice, because this, you guys are asking a P-time. In the room today, I was doing something else, and I was busy, and I didn't get it, but I called out at some point that on P-time, so look at the bottom left here. This is a 5-minute chart. I'm going to make it a 1-minute chart. I said that's the low of the day. And this is, you could find this right in the manual that I teach. This is exactly, and this is not even me. This is just real good just technical analysis. I mean, if you understand this. So P-time, first of all, this is what's important, guys, first, is that look at this hourly chart on P-time. Do you see this? Right? Right? So here's 3 things I want you to notice. Hourly chart is strong in an uptrend, right? It's flying. Number 2, after 674 bars down, I counted them, it's 674. That is the biggest bar in the chart, bar none. And it's happening on the biggest volume, bar none. And it's happening right at 10 o'clock reversal. That's the low of the day. And I said that here, right? I could have to look at the time. I said it there. I didn't say it up here. I said it there. Just pennies off the low. That's the low of the day. That's just a pattern that is just beautiful. That is how you end a move on, since you're on a 1-minute chart, the 60 would have to be in an uptrend, but that's how you end a move, right? Good, nice, Jeff, beautiful. Of course, you always like P-time yourself, so you probably would have been in that even if I didn't scream it out, but yeah, I said take a picture of that because that's just as good as it gets. And The problem is, of course, you just don't see that every day with the stocks you have on your screen, but that's what it was. All right, let me finish up here because it is, I don't think I'm done. I don't even know what I have. I had so much information today. Let me do one more rookie comment, if you don't mind. Backtesting is where it's at, man. Backtesting. Get one of those back testers. It costs about $1,000, and you backtest your strategy until it works. Well, don't get me wrong here before you even make a nasty comment. There's some value to backtesting in two different respects. Number one, even if you're backtesting a strategy, I think anytime you're looking at a chart and watching price action and evaluating it, I think that's very beneficial. So that's a good thing, okay? What the bad thing is that you will not find the magic backtesting formula that works. I guarantee you. Matter of fact, I bet you any amount of money that you want to. How do I know? How can I make that bet that you will not devise a backtesting? Now, when you're talking about backtesting a strategy, what is it that has to be true about that strategy in order to backtest it? And I'm not sure if you'll get the point of my question. I'm going to give you a few shots though. If you are going to backtest a strategy, in other words, you say, here's my strategy, and now I'm going to put this in this computer system and see what would have happened if I would have traded, this time of the day on these 100 stocks over the last month. What would have happened? Not consistency. Well, it's sort of consistency, but in order to backtest a strategy, what does that strategy have to be? What would it have to be? Of course, I could keep it secret. Sort of, you guys are hitting on it. It would have to be a totally objective strategy. Totally objective. In other words, it would have to be something as clear cut as you're going to go long when you trade 1 penny above the high of the last 22 bars, and your stop is going to be based 1 penny under the low of the last 15 bars, and I will take a profit when I go 1.5 times the distance of my stop, right? I mean, it has to be that exact. Because you can't put subjectivity in a computer, right? You can't say to the computer, well, when I get a quality pullback near the moving average, test that for me. The computer can't do that. You have to put numbers into it, right? And the problem is that there is no objective concept that will ever work. The market will always be a little bit subjective. It has to be. Otherwise, there'd be no losers in the market. Now, it says, funny story here. I did this a long time ago, the speech I'm doing right now, about the fact that, well, number one, there is no, because this is what you call a black box. That's what a black box is when you have a strategy that's totally rules-based that works. And there is no black box strategy that works. Now, before you start yelling at me, yeah, there's a couple out there that make 6-7% a year, and there's a person behind it changing it every day. So it's not like it's a subscription thing where it's really not a whole lot different than having somebody just give you plays. In order, there's a subscription where your guy's giving you a black box numbers and he's tweaking it every day. Well, okay, I mean, that's not really the same as you, and it doesn't make much money. It's not the same as you saying, here's a strategy that's going to work from here to perpetuity forward, and all I have to do is just do this from now on. When I did this speech, a guy private chatted me, and he said, can I call you? You'll find this interesting. I said, sure. So he calls me. He was actually the guy for Goldman Sachs who was put in charge of their black box technology division. And he said to me, you know what? He said, I worked at it for 2 years. We worked at it, and we determined it's impossible. It's not going to happen. We kept the division going because we didn't want to give, they had clients, and he said, we didn't want to, give the impression that it can't be done or we're not doing it. But he said we effectively gave up on the program because it's just not something that's happening. So the real value of number one, if you want to backtest your strategies and you go look at them all and you learn from it, that's great. It's a learning process, but you're not going to come up with a magic formula. Here's another way I can prove it. Some of you guys do this. Give me your magic formula. What is it? It doesn't exist. But where you really get a value from backtesting, and this is one of the most important things, and nobody really looks at it this way. Backtesting is extremely valuable when you take your trades you actually did, not the ones you're thinking about, not the ones you made up, the ones you actually did, and you go backwards. And you apply, I think it says, a what-if thing to everything you did. In other words, you go back and look at your trades, and you said, you know what if I would have changed my entry to blah, blah instead of blah, blah? Would that have made more money for me? What if I would have changed my targets to X, Y, and Z instead of A, B, and C. And you go through and you analyze how you enter, exit, and manage your trades. And that's where there is a fortune to be learned. That's where the gold lies, in backtesting what you actually do. And I call it a what if concept. What if I would have done this instead of what I did? There truly is what I believe to be magic. Does that make sense, everyone? For those of you trying to find your way and you want to do it on your own, or you are waiting to get help and you're just, because you don't have time right now, there is a wealth of information on that page there. I think more than you will find anywhere on the internet in terms of good information. I don't mean just definitions of worthless blah, blah, blah words. I mean, you have real information if you understand it. So you can visit the free stuff page. And I always want to remind you a couple of things. Don't run off, because 2 slides from now there's something I want to remind you of again. Just a reminder, every one of these I just throw out there, if you want to day trade and you don't have the 25,000 needed because of the day trader rule, you can trade with as little as $5,000, $50,000 equity. Now, I don't recommend anybody to start trading that can't financially do it. There are people that have their money tied up in something else. They have tons of equity in this, equity in that. They just want the cash, or it's all in another account. Or maybe you just want to take the cash you have and magnify it. But you can get 10-to-1 buying power. You have to email me for the details about this. I don't want to spend any time on it, but if you want to be able to day trade and you can't right now, there is a way to do it, and it's not through me. I don't do this. I'm not part of it. It's just a great referral place that I've known for years that is never, ever heard a bad thing. They're just doing good. Your money's safe, and you also, you can be trading in 2 days. There's no hoops to jump through. There's no test to pass. There's no levels. It's just you trading your money, your risk amount. If you want to combine that with the seminar program at DTS, you can. To go to prop, there's nothing you have to do through me. I want to help people. I'm not saying you have to do anything, but if you do want to take the seminar program with the prop program, there's a little deal on it. Email me. You'll get the details. I want to remind you of this, the biggest mistake people make. Trading successfully is a 3-pronged process. And thanks, Jerry. And it starts with superior technical understanding, which, quite honestly, I don't think is easy to find. It then has to be supplemented with knowing how to handle the psychological aspects of trading. If you're new, you probably are thinking, what's he talking about? But trust me, there's nobody that does not struggle with those when they get going. And to me, math and probabilities is something that's not even really discussed by almost anybody. And I think it's perhaps the most important part of the 3 legs. To some extent, I mean, I'd rather see it come up short a little bit on technical understanding, be focused on a strategy too, and really understand math and probabilities, the moment in time thing. Because I really believe you can make more money understanding the math and psychology part, as long as you have a good basic understanding of technical analysis. You don't have to be an absolute expert, okay? Thank you, Fire Tower. Thanks. So with that, I am done. Let me know if you have any questions. I'll gladly take any questions you want to talk about. Pretty good, 6:10. I really thought I was going to go way over tonight because I had a bunch of time. For those of you interested in seminars, if you are, the next one starts July 18th. We just kind of finished up one cycle. And those of you in the program, remember tomorrow night is the practical application and review night for those of you in the program. Any other questions? You are kind of a quiet group tonight. That's okay. It looks like we're good. All right. All right, guys. Have a great Wednesday night and have a good rest of the week. Those of you in the room, I'll see you in the morning. All right, guys. Take care. Have a good one.